Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
Today we have Caleb Angel with us, and he's in the lending field. And I'd just love to know your background and how you got into the whole lending field. You've moved around quite a bit, so a very interesting history.
Yeah, so I grew up in Seattle, moved out to New York for college, spent 5 or 6 years there post college, and I got started in the consumer lending space. That's kind of how I got into lending. I always liked real estate, but I also was kind of a numbers guy, and to me, lending was that intersection of where real estate and numbers. So got into the consumer lending side to start, worked for an online lender, and progressed through that kind of company since they're more of a tech company than a finance company. You move more into kind of an operational strategy type of role. I always like to be client facing and working with people on a regular basis. So once I kind of graduated, let's say, from my roles there, I wanted to kind of turn it back over and go more towards sales side, where I can make a little more money doing that, as well as something that I just enjoyed more. So during the pandemic, I moved down to Austin, Texas. Just wanted some better weather, and my wife had some family out there, so thought it would be a fun place to live for a little bit. So moved down there, ended up meeting with a guy who was trying to build a team in the private lending hard money space. And he said, come try this out for a little bit. It's a good space. You're not necessarily working with these people who are going to be doing one loan for the next 30 years. You're going to be working with clients on a regular basis, building rapport with them, building relationships with them. And that seemed pretty tempting. So I decided to make that move. It was kind of also a little scary in a sense because it was jumping into an all commission type role, but I figured now was the time to kind of do that before, kid and a mortgage and all the other sort of scary things would come stacking up.
Right.
So decided to do that. Found some success. It kind of fit what I like to do, which is the building relationships with people, as opposed to just a one-off sale kind of thing. So really enjoyed it. Also got to work a little bit more technically with the number side of things, as you do
Mm.
with investment properties as opposed to consumer loans. So mostly focused on fix and flips, ground up construction. I That's probably ground up is what I did the most of, just because there's a lot of there's a big need for inventory, especially in the Texas markets at that time. So a lot of ground up construction, and then for people buying like long-term rental loans, which we call DSCR, debt service coverage ratio loans, and those were 30-year loans that someone who's purchasing a house to rent out for the long term. So that's where my main focus has been. I've done a little bit of multifamily as well, multifamily ground up, some multifamily rehab. Never really touched the long-term multifamily type asset, but definitely did some ground up projects as well that kind of helped bolster my knowledge base when it comes to that. And then about a year ago, moved out to Southern California. Still working for a company, HouseMax Funding, that's based in Austin, Texas. But we're nationwide, so it's pretty useful to have some guys kind of all over the place to tackle different regions too.
So, how are you prospecting for leads?
Yeah, so I've gone through a couple different iterations, because this is now the second company that I've worked for. So with this company, they do a pretty good job of generating leads from pulling tax records and that kind of thing, and then a lot of smile and dial cold calling. So
Mm.
which has its it can beat you down a little bit, but there's also the fun in never knowing who you're going to talk to next. So that's always kind of a fun aspect in my view. But even looking through county records, seeing who's buying houses, how many if someone's got construction in their name and they own 7 properties, then they're probably going to be a good client. So um,
So
doing
are you doing that prospecting? Are you looking in the records?
Yeah, I mean, I've generated it. I've kind of found the list of companies that I want, and then sent it to someone who can actually go and find their phone numbers and emails for me. Now I don't need to do as much of that because the company I'm working for does a good job of generating that for me. So I'm not as in the weeds of that. It's more calling and talking to people, but every once in a while, if it's a slow day or something like that, I'll try to pick around and find my own. Networking events are also a great tool that I've found. Like local type of builder associations, network events and stuff like that, and conferences have I found success in too.
So you really are out there looking and prospecting at all times. Are you using any kind of CRM, contact relationship management software?
Yes, yeah. So we use HubSpot here. I've used Salesforce in the past. I've used Zoho, yeah, in the past. But HubSpot, you know, they all kind of have their own form and function, but they're all pretty similar at the end of the day.
Yeah, yeah. They just keep track of things and tell you when to call and when to call back and so forth.
Yeah.
So they follow through the same sort of steps, so to speak. And
Yeah.
that's worked out nicely for you.
Yeah, it's kind of a thing that, as a sales guy, you hate how much your boss tells you to use it more and enter all the information in there, but
Right.
when you actually do use it, there is you can definitely see the benefits of it too.
Well, it is. I think that's a good point that Salesforce and some of the other CRMs are pretty intensive in terms of data entry. But once you get it in there and you get the work kind of in the mill, so to speak, then it becomes a much easier process.
Yeah, definitely. And take some of the thought out of it too, where it's, I log in and I know, okay, I have this to do, and then I'm gonna move over to whatever I need after that.
Well, it sounds like you got pretty good at cold calling. Do you have any idea? I know some people require, like 30 calls a day or something like that. Do you have any sort of quota that you work with?
I set my own quotas. I don't necessarily have, if I'm not doing anything, I'm going to get in trouble for that for sure.
Well, if you're
But,
on commission only, then yeah,
right,
yeah,
exactly. So,
yeah,
I don't necessarily have a hard number, but I create those numbers for myself. My goal is always, 10 to 15 conversations a day. And then it's however many calls it takes me to get there.
yeah. No, that's that. Oh, I see. Because you'll miss calls or leave a voicemail or whatever.
For
So
sure.
what do you think your ratio is of actually getting a hold of people?
On a good day, it's probably 1 in 5. On average, it's probably 1 in 10.
Yeah, yeah. Okay. So you got to make whatever 30 to 50 calls a day to get 5 or 10 conversations going.
Yeah.
And of those conversations, what do you think your um, ratio is of actual getting a lead out of that?
If I'm having, let's say, I guess it's 10 quality conversations, probably, one or two of those will turn into a lead. And then, maybe one of those will end up kind of being a real loan that we could potentially do. And, whether or not they end up closing, that's, kind of a whole other
Yeah. Oh,
conversation. But,
oh, yeah, yeah.
but
No,
yeah.
yeah. But it sounds like maybe if I'm calculating right, maybe 1 in 50 calls or something like that turn into something that might actually make you some money.
Yeah, I think that's probably a fair conversion that, I would be pretty happy with.
Yeah, yeah. Well, and then as you go along, you obviously build up your cadre of clients and so forth, and you hope you have
Yeah.
repeat clients and so forth.
Exactly.
So how long have you been in that office now?
So I've been for this company since March of this year.
Oh, okay. All
Yeah,
right.
the last company I worked for went out of business, or they decided that this business purpose lending wasn't for them, so they closed their doors. And then I moved over to this one.
Oh, that's interesting. They
Mhm.
decided to get out of the business side of it and they stayed only on the consumer side? or the
Yeah, so they were already a kind of a big operation on the still non-QM, but kind of like jumbo loans and second homes and that kind of realm. And then they wanted to get into this business purpose lending for investment properties. And they tried it out for a while. They, decided that it wasn't making the same amount of money as their other side, so they closed their doors. So I think I've been spoken for. This is actually the third company now that I've been a part of. The kind of post COVID, retraction in
right.
22 put a lot of people. So the first company I worked for, they had some bad deals on their books, so they kind of had to stop lending for a little bit. They're I think
Uh,
back at it now, but I kind of jumped off as they stopped being able to fund their own loans, and then now I'm at a place though where I'm excited about it. They got plenty of capital behind them, so that's kind of the name of the game.
well, the government regulations changed a little bit, didn't they?
Um, I mean, the last
No?
couple years, not particularly, at least in this field, or nothing that's
Yeah.
really, affected me too much. So I haven't, been had to make any big pivots based on
Oh,
what
that's
the
nice.
government's
Yeah.
doing, other than,
Yeah.
messing with the
But
interest rates.
you don't really want to get into the normal house financing side of it, it sounds like.
No, I did that, and there's definitely a good place for that, but it's a lot of one-off deals. I kind of I say that, my skill set's not necessarily in sell me this pen and that one-off
Right.
transaction kind of deal. I'm good at building relationships with people, and my line to a lot of people is I get excited about the first deal, but the first deal is great, but I really get excited about doing deals 4, 5, and 6 with you, because that's kind of the name of this business, is building those relationships and having the repeat clients.
No, that absolutely. So does your firm have a bunch of institutions that you go to find money?
Yeah, so we have a couple different institutions. I think we're consolidating that a little bit, but for the most part, you kind of you originate the loans with the balance sheet, and then you go and you sell them on the secondary markets, or the main kind of couple of guys that want to buy your debt.
So is this primarily hard money lending?
Yeah, I mean, it's, technically they call it private lending, which I
Right.
kind of say sits somewhere between banks and hard money, but for the most part, it acts similar to hard money. Just we sometimes take a little extra look at the person, as opposed to just all asset based.
So what sort of rates are you running these days?
So for our fix and flips, we're starting out in the high eights. We kind of just got approved for that, which was exciting, that we just kind of was able to knock those down and get into that range. For ground up construction, it's going to be more in the 10 to 11% range. And then for those long term, debt service coverage ratio loans, we just kind of originated a couple in the high fives.
Oh,
So
wow.
that Yeah, those are really coming down, which is nice.
Oh, so the numbers are coming down. It was only what a month ago that rates got bumped down a half a
Yeah.
point. So
Hmm.
so you're seeing a change right now, huh?
Yeah, definitely, especially on those long-term loans, because those kind of track a little bit closer to the Fed. It's not a perfect science, because we're private money, we're not a bank, but we definitely get to reap some of those benefits at some point too.
So do you actually have investors or you just go to certain groups for your money?
It's mostly institutions. I'm not as much on the capital market side, so I don't know all the details on that, but I know that it's really just institutional money that we work with,
And what sort of ratios are you running?
like leverage levels and stuff like that.
Yeah, yeah.
Yeah, so for ground up, we're really at, we max out at 85% loan to cost for the most part. We can get up to 90% sometimes for the right kind of person, but 85 is where we kind of like to be. For fix and flip, we'll do 90% of the purchase and 100% of the rehab for experienced guys. We have done 100% loan to cost at times as well for the right people. And then for those long-term loans, we're usually up to 80% LTV on those.
Wow, that's pretty high. So,
Yeah.
so how deep in the numbers do you get? You're a numbers guy.
Yeah, I would say, it's my responsibility to do the first pass for sure. And then depending on how the client kind of wants it all to go, I'm with them, through the whole length of the process, adjusting as the numbers as they need to go. So I would say, I'm kind of the first wall of defense when it comes, and that include, and by defense, I mean, adjusting all the numbers to make sure that they're the right loan. And then if as long as I did my job right, underwriting really just needs to check boxes and say this is all good. If I'm not doing my job correctly, then I'm going to create a lot more work for them.
Which you want to avoid if you can. But once you sort of
Exactly.
know the name of the ratios and so forth, you can make it kind of um, fix all the items. So, well, not fix them, but make sure that you're in the right area for what they're
Yeah,
lend for.
for
Yeah.
sure. And experience also has helped me to be able to know, well, they're, lacking in one area, but so let's adjust the levels here. And I say that, my job is to sell twice. One is to sell to the client, the company, and the other is to sell to underwriting the deal. So, sometimes I have to kind of go back to underwriting and say, well, why don't we do this? And then, get their approval for that.
So what's the average amount that you loan in each of these categories?
Yeah, I would say, generally speaking, our average loan amounts probably in the four to $500,000 range. When I first kind of got started doing this, it was probably more in the 7 to 800 because again, I was doing a lot of ground up construction and someone building two or three or four houses at a time. So that was creating some higher loan amounts. The fix and flip is definitely a little lower because especially you're trying to find or a lot of these flippers are doing smaller houses for like starter homes for people. So you got to do a few more of those, but if you find the right guy, it's kind of just plug and play from there.
So that's interesting. So how many fix and flip people do you have?
Um, in my book right now, I'm probably working. It's hopefully it grows every day is the
Yeah, yeah, yeah.
idea.
Yeah.
But if I have 20 to 30 fix and flip guys who I know are
Wow.
doing consistent
Wow.
business, then that's great. I would say moving over companies has made me have to kind of reset a little bit here and there. I can keep my same kind of core group, but if you get a guy who's going to do 5 to 10 flips a year, you only need 10 of those guys, and you're doing pretty good. And then you add on the new construction and rental loans too.
So are these people mostly in Marina Del Rey or are they out and about?
They're pretty much across the country. I have some
Oh,
in Southern
really?
California. I have a
Oh,
decent amount in Texas because that's just where I had some relationships in too.
uh-huh.
But I mean, I'm kind of going nationwide with it. Although now I'm trying to home. I want to be with the people that I'm doing it. So since I moved out here, about a year ago, I've been trying to hone down on Southern California a little bit more. But I'm not going to say no when someone's got a deal somewhere else too.
Well, so how does that work when you have to kind of go through? I assume there's got to be some kind of inspection process involved. So how does that work?
Yeah, so we use like a AMC, a national AMC
Oh,
for the
okay.
appraisals, and we just tell them where the property is, and they find the guy and send him out there.
Yeah. Oh, I see. Okay. And then do you actually inspect at the end of the process too, after they've finished construction?
We don't do it necessarily after, but throughout the life of the loan, as they complete progress on the property on the construction, then that's when or I guess maybe to take you back just like one extra step, when they close on their loan, we fund a portion of the purchase usually, and then we hold out the construction amount in an escrow account. And
Okay.
then as they perform work on the property, they're able to draw down off of that construction escrow account to reimburse for their funds.
Right.
And
Right.
so with each time they draw down on the construction escrow account, we send an inspector out there to confirm that the work that they said was
Mm.
done was actually completed. And so, by the time they do their last draw, then we'll send an inspector out there and we'll know that the property's done.
Wow. Okay. So it's pretty labor intensive in a lot of ways.
Yeah, I mean, we should always try to make it a little bit simpler. So now, the draw process isn't too labor intensive. It's just, it's kind of an online portal they have, and they just, say I used X amount for this line item. And then as soon as they do that, usually within 24 hours, an inspector's out there, and then within a couple days after that, they get their money.
So do you run that inspection process or does the lender actually do that?
No, so yeah, we have like a separate team that
Ah.
operates all the draws and everything like that. So once they close, I'm still there to answer questions and can be a bridge, but for the most part, they're gonna get a servicing team member to work with and a draw team member to actually manage that.
Oh, that's very interesting. I was not aware of this kind of whole world, so to speak. So the
Yeah,
whole flip and flip, fix and flip world, so to speak. Uh,
yeah.
so it obviously is very popular and people are doing it. Are most of these people contractors or are they just individuals that hire contractors?
Yeah, it's a good question. It's a mix. I would say, there's a good amount of people who are contractor. One of the better types of guys to work with is someone who's been a contractor and now has the kind of capital to be able to go and do it themselves. Because one, they know what they're doing, and two, they're hungry to kind of get started. Every once in a while, you'll get someone who's just a passive guy that works in tech and has a lot of money and sees it as a potential opportunity.
Hmm.
And so then they'll just hire a contractor. I always tell someone if they're getting into it, the first step is to find a contractor that you trust. Make sure that, it's someone that you want to work with because they're going to basically be in control of all of your money for the next 6 months or so.
Right, right. And so you got to have
Um,
a good relationship with that particular person, that particular contractor. So has
yeah.
all the fix and flip TV shows kind of enhanced this whole world?
It has, yeah. There's kind of a running joke in my office now, and I'm assuming most offices of people in my industry that you get the people who are the contractors, and that's the people who's their livelihood, and then you have the HGTVers,
Uh,
who watch the show and said, that looks fun, let me try that. And a lot of times they're going to be a little more in over their head than they're probably expecting. But again, that's why I say, if you want to get into it, find a good contractor. It's a little more complicated than it looks on TV. So, you're going to need to lean on someone that knows what they're doing.
so what would you say your ratio of success is? Do most of these fix and flips work, or what happens there?
Yeah, I mean, I think, in the couple companies that I've worked for, the delinquency rate has been, somewhere in the 3 to 4% range. So, whether or not they're massively profitable, that's kind of a little more dependent. I would say if it's someone's first or second deal, your goal is not to make a boatload of money. Your goal is to kind of understand what you're doing. And then once you kind of get the process and how it all works, because everything takes a little longer than you expect and it's a little more expensive than you expect. So once you kind of get that down, then that's when you're going to be able to start really turning profits. But there's just a need in the market right now for houses in general. The inventory is low, and people who are in houses where their rates are 2 or 3% aren't moving. So there's just a need right now. So houses will sell if you put them out there. It's just about how profitable you're going to be is kind of the end
The
question.
key factor, whether you're going to do it again or keep
Yep.
trying to go in this market and so forth.
Yeah.
Have you done any work in the Las Vegas market?
I actually was just quoting someone out in there. I think they're just outside of Vegas, but haven't done too much over there. I think Nevada has a little bit more regulation in terms of who can lend in their state. So we now
Uh,
can, but the previous lenders that I worked for were not able to lend in Nevada. So I didn't get too much exposure to that market.
so how much do you have to know about construction?
Luckily, not too much, and that's why I was able to get started in it pretty quickly. But after doing it for a little bit for a few years now, I have at least a better idea of what construction looks like from behind a computer. If you threw me on a job site, I can't tell you that I would know what I'm doing, but I can look at a scope of work or a budget and see if that at least kind of relatively makes sense for what they want to do. If I look at an appraisal and a budget and see it, but I also lean on experts for that too.
Oh, okay. So you have some people in-house that are construction experts that can say, meh, these numbers don't look quite right. So,
Yeah, exactly. Well, and the appraisers also are doing that as well. So like when we order an appraisal, we're usually getting
uh,
back two values. One's the as is of the property, and then we also send them the budget, and they give us, based on this budget, then the current value of the property, it'll be worth this much when you want it, when you're all done with it.
so what do you do in terms of loan guarantees? How's that work?
Yeah, so for the most part, so we only write the loan to entities, but there's always has to be a main sponsor who's going to give a guarantee on the loan.
So a lot of these are LLCs or some other legal entity, and then you have kind of a guarantor behind them,
Yeah, exactly.
and hopefully somebody has a high net worth or whatever that you can
Yeah,
feel pretty safe with.
yeah. So we look at when we look at a person for their profile, because for the most part, we're just looking at the asset, but we do look at a person's profile, and the three main factors that we look at are their experience, their liquidity, and their credit score. And
Yeah.
so, if you hope that all three are great, if one's lacking, the other two can potentially make up for it. It just kind of depends.
How
Um,
much liquidity do you look for?
yeah, so our standard kind of calculation for it is and it's been the same at all the places that I've been at and seen. It's basically the cash to close plus 10% of the budget plus 6 months of interest payments.
Oh, I see. Okay, so that's pretty standard. Okay, and you have to have that in a CD, or where do you have to, does it matter?
No, any savings account, checking account, anything like that. Retirement accounts, we can use a little bit of it, but usually it's something like 70% of the value because, they can't necessarily draw it all out at once as
Right,
easily. But
right.
yeah, we don't need to keep it anywhere. It just can be in their bank accounts. We just need to see it.
So it sounds like a person that wants to get into a fix and flip, um, let's see, 10%. So it sounds like they don't have to have a huge amount of money.
No, no, I mean, it depends where you're doing it. Obviously, if you're doing it in Southern California or the Bay Area or something like that, it may have to be a huge amount of money because, you can pick up
Right.
a house for less than that. But if you're doing it, somewhere where it's more, you're buying a house or you're gonna build or flip a house and sell it for 400,000 or something like that, then yeah, it could be less than 50,000 for sure.
Well, so if you're giving out, so your average rate is maybe 500,000. If you had 50,000 in the bank or 60,000, does that sound like about the right amount?
Yeah, I mean, yeah, if the loan amount's 500, then they may need a little bit more than that, but if it's the loan amount's like 300, then yeah, maybe 50, 60 or
Yeah,
work for.
okay.
Yeah.
Okay, I was just trying to get a sense for the
Yeah.
listeners about, okay, I want to get into this business. How much money do I really need to start out? And
Yeah.
it sounds like you could start, depending on where you are and what you bought, you could start for, 50 to 100 grand or something like that.
Yeah, for sure. And I always tell people, I know the big deals seem attractive, but start small, start with the starter homes, the 250 to $500,000 homes. Don't jump in because again, those first couple deals you're just trying to get your bearings. And don't take the big swings because you don't want to get your bearings and when you're risking a lot more money. So start small, get a couple under your belt, and then you can start taking bigger swings.
Where would you say the best markets are for this type of fix and flip?
Um, from a personal perspective, I think like Seattle is always going to be a good market. There's a lot of job growth there. Anywhere where there's job growth, it's going to be pretty good and low inventory. There was a while that Austin was great. The problem with some of those expensive markets or markets that saw a huge kind of spike, it's hard to find a house that has enough profits in it.
Mm.
So you're really wanting to look at places, like Colorado has a lot of good pockets in it. Florida's always going to be a good place, but you want to go somewhere where you're not necessarily going to find a dilapidated house for $800,000, which, some of these markets, that's just what you've seen and kind of happen with some of these places that experienced huge spikes in growth. But um, you know, again, there's people that are needing houses kind of everywhere, so there's opportunities in a lot of different markets right now.
Yeah, no, that I think that's really key is to find a market that's growing, but they haven't spiked to the point where you're having to deal with basically inflated prices already on a dilapidated house.
Right.
So,
Exactly.
yeah, I mean, I've seen a lot of houses in Cleveland and Kansas City,
Yeah.
kind of those markets. Maybe
Yeah,
not.
Dayton, Ohio is actually one that I think I've seen the most of by far in the last month or so, which is
Oh,
just
that's
an
interesting. Huh,
interesting one.
that's
Yeah.
interesting. Yeah, Ohio seems to be a fun market right now for some reason.
Yeah.
Things are growing there and prices are pretty reasonable, but there's also a profit margin there that's working.
Yeah, exactly.
So, well, this is
Yeah.
fantastic. So, where would people get a hold of you?
Yeah, so you can reach me my email. It's cangel, just like it sounds, ANGEL at housemaxusa.com. I'm on LinkedIn, Facebook as well. And I'll give out my phone number too. 206-940-1582. Any of the listeners feel free to reach out, more than happy, especially if you're first time and want to just, have a conversation about it, always happy to chat more about it.
That is fantastic. I look forward to hearing from people to see if they've actually gone through this process. It's the whole flip and fix world is just a big deal right now.
Yep. Yep.
So
People are liking it.
definitely. All right. Well, we will talk to you down the road.
Yeah. Thanks, Bruce. I appreciate the time. Obviously, happy to come back on whenever you'd like and chat more.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.